What's up? What's up, everyone? How is everyone doing? Let me go over a few names. What's up, Alex? How you doing, brother? How you doing? What's up, Fabian? Goedendag, good day, good day. It is a good day. Every day is a good day, right? What's up, legend? Moment. What's up? What's up, Andreas? What's up, Vivace da Capo? I'm sorry if I completely butchered that. My bad. What's up? What's up? What's up, Noel? Great to see you again. Hoping to learn. Let's start. Yeah, I hope you do learn something. Well, usually there are a lot of great questions. So then I go on my little rant and we all learn something, which is beautiful. What's up? What's up? What's up, Grace? How you doing? What's up, Adam? Salam. Salam, salam. What's up, everyone? How is everyone doing? Hi, mate. Hope you're doing well. Hope you are doing well as well. I'm doing great. Thank you for asking. It would be interesting to do your market review by including this video in the market structure. It is much more telling because a lot of questions following this video. For sure, let's do it. How to do the plot and narration in order to identify short-term low. Exactly. Perfect. Let's go over it. I'll try to incorporate it where I can. What's up, Beefy Beats? How you doing? Lost Trace, the legend himself. The legend. If you haven't checked out Lost Trace on Twitter just yet, I would highly advise to do so. What's up, everyone? How is everyone doing? Wow, there's a lot of people here. Love to see it. A lot of familiar names like Adnan Ali Khan. I remember him. A lot of familiar names. Love to see it. It's 6:14 in Nepal. Wow, the dedication. The dedication to watch this. That's insane. From South Africa, beautiful country. Hope you're well. I am doing great. Thank you. I'm doing great. From the Philippines. Wow, that's insane. Hope you are all doing well as well. Hope everyone is doing great. Hope everyone is having a great weekend. Take your rest, of course. And it's slowly time to dive back into the market. Hey from the Netherlands. Hey from the Netherlands back. Was waiting for a long time for the stream. I know a week feels, sometimes a week just doesn't fly by and it feels like ages. Greetings from Utrecht. Greetings from Flevoland. Oh, close to Flevoland. From Russia, love to hear. Korea, Atlanta, UK, it's Kenya, Pakistan. A lot of people from India, I reckon. Morocco. Yeah, it's insane. It's absolutely insane. Let me go over this one. I have a question, Ario. I recently changed from basic SMC to liquidity-based trading. I'm currently creating a static top-down approach. Any tips? Yeah, when you first start with a static top-down approach, I think it's very relatable that you start off with, you have like 20 sentences, like, don't forget about this, don't forget about that, don't forget about this, don't forget about that. And what I always did is I started off with a great top-down analysis and was like, all right, let me just follow these lines and then I have a great top-down analysis. And I didn't do it after a while. There was just too much information to read, like I didn't do it. So I'll get to top-down as well in the HC guide, but what I always teach in the mentorship as well is I teach you need to have sentences. So a sentence I always use is if we are going lower, where are we likely going lower from? And that's not just a sentence that I say because I want to know where we are going lower from. No, this activates a whole chain of reactions inside my brain that I think, oh yeah, I need to think of this, I need to think of that, I need to think of this. And then sort of my brain automatically gets triggered. So you need to have a trigger sentence that leads you to think about a lot of things. And then, of course, the basic rules, you start from the top, you start from the highest time frame, then you slowly start working your way down. Now, SMC is pretty similar into some sense. The most struggle that I always see from people that are switching from basic SMC, what I mean with basic SMC, I always think about supply and demand traders. They usually expect a huge retracement for their entry to happen. That doesn't always happen. So that is also something I would take into account. I've studied the ST model being ICT student and worked a lot. So the thing is, should I be with how many pairs to trade with? Is there any time frame limit? What I would always advise, you can focus on multiple pairs, but you execute always on one pair only or one instrument. unless you are trading the 4 hour and above. So if you're executing on the 4 hour time frame, then I would say, all right, you can go up. You can trade multiple pairs, even if the time allows it. Like, it's very specific for your case. If you don't have anything to do besides trading, then 1 hour and above entries, you can also incorporate multiple pairs, I would say. Yeah, for sure. If that makes sense. Love to see it, everyone. Wow, this is great. Thank you for your A to Z video. The way you teach made me understand price action better. Almost lost 5k challenge B50 for breach. Now it is profit by 100. Hope to pass phase 1 this week. Love to hear it. That's actually insane. And that's all you. Like, I can help, but that is all your hard work, my friend. That is nothing to do with me. Completely your fault. It's not your fault. It's your doing. It's your hard work. It's absolutely up to you, my friend. Hey, bro, want to join the masterclass? Well, everyone that is here, the masterclass is opening up again on the 25th of August. So that is next week on Friday. And this enrollment will be, well, I don't want to say a lot, but the information in it will be the best one yet, is what I truly believe. Where are you from? Just curious. I'm from, I believe you're from the Netherlands as well, like, right? Indeed, friends. I'm from Harderwijk. It's, yeah, everything is close to Amsterdam, but it's pretty close to Amsterdam, I would argue, but everything in the Netherlands is very close to Amsterdam since it's so small. Let me go over a few things. What am I seeing? Let me see. Watch this live session. Took 3 hours off my from my 9 to 5 job to watch because I already missed. Love to hear it. And if you miss something, you can always watch it back, right? No worries at all. How to join the masterclass? Yes, you can currently sign up on the waiting list on wap.com or just ario.io, the things you are seeing at the bottom right there. You can go to them and then you can sign up on the wait list. There are, I believe, 5 spots left. So we're opening up on the 25th of August. So that's upcoming Friday. Yes. Let me see. What am I seeing? Let me go over the weekly forecast, actually, because I know a lot of people are waiting for that. I mean, that's the whole reason we're doing this, and the questions, of course. Let me go over the weekly forecast. Afterwards, I'll go over all the things, all the questions, and happy to chat with everyone about anything you could think of. You can even ask me anything besides trading, like outside trading. Whatever you want me to go over, I can go over. No worries. All right, perfect. Weekly forecast. So on the dollar, what did we see last week? Even though on a weekly basis, you would say, yeah, it's a pretty nice week. I would argue, it was, by the way, this was my first week coming back into trading from my vacation. So I didn't do that much. I just studied the price action itself and just see where are we heading, where are we coming from, all that sorts. So on a weekly basis, I would say, yeah, it looked pretty clean. Like we have a nice up candle. On a 4 hour and a daily base, I would argue, yeah, this wasn't the cleanest week. Not really. It just wasn't that clean at all. And just not, yes, there's a trend. We are going higher. But for a clear trend to be a clear trend, you need some kind of discount raise that we are clearly going higher off of. Like, just for me, wasn't that clean of a week. So I would argue that right now we do have a daily fair value gap to work with there. But if we are continuing higher, remember the fair value gap video. I personally would not like a retracement next week all the way into that daily fair value gap. If that does happen, then I do think that we might even continue lower if that does happen. So what I am liking is that we are in the midst of creating a weekly fair value gap next week, potentially. So there's a potential weekly fair value gap in the making right there. What that means is if it does want to create a weekly fair value gap right there, then it can either do two things, right? It can consolidate or it can expand higher. So right now, I don't see a clear discount array. Sorry, I don't see a clear discount array that we can head higher from to target that high. If we create a weekly fair value gap right there, then we do have one. So until we have a clear daily discount array or a clear 4 hour discount array, I am staying on the sidelines. So that means for me, Monday, I am not trading as well because of the news factor. As you already know, I am not trading on Monday. So I'm waiting for a clear discount array to show itself. And the reason I'm not using that one is because it's a big retracement that it needs to make and then continue higher. Like, based on the fair value gaps telling us a story, I would not really like that. So yeah, that's the way I view it currently. A bit uncertain still, but I do still think we're heading higher. The only question is, where are we heading higher from? That is what we have to figure out. And if there's no clear discount arrays to head higher from currently, then you wait until you have a clear discount array that you can head higher from. With a clear discount array, for me, it's very logical, but I might have to define it here. It's a clear discount array is when we have a new fair value gap higher that either leaves behind a breaker, an order block, whatever, as long as we have a new fair value gap higher. That new fair value gap higher, that indicates that something was left behind. So for example, right here, we leave behind fair value gap, and then obviously you also leave behind that order block. I need that fair value gap. That is what I need. I need a new fair value gap higher. That is exactly what I would need. And that can be offered on the 4 hour and the daily, right? Daily might, of course, take 3 days, and the 4 hour will do it faster. Then on ES, we expected lower prices with this being a target and that being a target as well, which is what we had for that week. Now, in the coming week, it will be very interesting because now we have this fair value gap to work with right there. And as you know, we just came below those lows. So what is the thing mentioned as well in the fair value gap video, right? If we are continuing lower, I would love to see these lows, see them as a resistance. You can see them as a resistance. I would love to see them as a resistance. If we retrace all the way back up until here, or even that order block, that's not what I would want to see. The reason being, if we zoom out again, we are in a monthly fair value gap. The monthly fair value gap doesn't automatically mean that we are continuing higher, of course. But if the daily retraces all the way back to that order block right there, then obviously the monthly fair value gap is displacing the daily time frame higher, right? It's displacing price higher. So in that case, I would look for bullish prices. So you could see this line with that fair value gap as sort of the last line of defense. It can reach into that. It can, but I wanted to do it very quick. No hesitation, quick boom and drop. Not just messing around right there and just, no. That's not what I would want to see. So either we continue lower off of this, or we could put a sting like a wick. That's what I mean with a sting. A sting like this, like that candle right there. That is what I would want to see. But not a big retracement. I would not want to see us come into that order block, not at all, because then I would expect higher prices. All right, DAX. What are we doing on DAX? Again, we still have that target intact right there. So that is a nice target that we can still head towards. How can we deliver into that target? We mentioned first that target for the week. That was a pretty close target. And afterwards that, it was pretty far. So there's somewhat logic in it that we didn't reach that. So next week we can reach that though. So if we are reaching that, again, sorry, I already forgot about the question, the beautiful question, the great question. How can we incorporate market structure in here? So this is a nice example for this example right here. What I mean with an intermediate term high being formed at a premium array is right here we have a daily fair value gap. Then this high, essentially this high, is your ultimate protected high. We are not coming above that high at all anymore. Now, also we have a new intermediate term high right there because it was formed when? It was formed after taking that target, that intermediate term low. Again, what I mean with combining the time frames right there is that on the 4 hour, these are just intermediate term lows, intermediate term highs. On the daily, that context that you need to trade on a daily is only this premium array to an opposing discount array. So it's just this high to that low. And all this is a market maker sell model. That's all it is. That's the easiest you can get. That is all the easiest context you can have. You don't need to specifically know that on the 4 hour that's an intermediate term high, but it is useful because when you want to navigate on the lower time frame, you know which highs are being protected and you know where to get involved. That is why it is pretty important, I would say. Let me delete all this mess. Then on the 4 hour, with that same target right there, we have, and again, you can see again the beautiful thing. Fair value gap's telling us a story here because the fair value gaps are pushing lower right there. Beautiful. Then you have this new intermediate term high. This is your ST right there. This could be your ST entry right there. And all you're essentially doing is trying to guess guessing. You could argue everything in trading is guessing then, but you could argue that right there you are guessing that that is going to be an intermediate term high because it already had displacement lower right there. Then with the same target right there. So that is how you can combine the time frames with the structure, etc. So this is a new short-term high right there. Then this is not a short-term high. Reason is not a short-term high because there's no fair value gap lower just yet. Again, you don't go down time frames to justify a fair value gap because obviously on the 1 hour there will be a fair value gap. Yeah, 100% there will be a fair value gap. We want to see it on the time frame. On the time frame we are looking at for our structure. So this high, keeping in mind that it can at the beginning of the week, if we continue lower, this is a high that can be swept. This high is less likely to be swept until we reach that target. So after we reach this target, which is just what? It's another intermediate term low. It's just based off of the fact that on the weekly, we are sweeping that swing high. So it's premium to opposing discount array. That's all it is. You're like, the more you zoom out, the easier it gets because you're just trading 1, 2, 3, 4 candles. That's all you're doing. But on the 1 hour, you're making yourself very difficult because you need a lot of price action to work with. So zoom out and it's only premium to discount array. That's all it is. And then if you go down time frames, you can see, all right, we are more zoomed in. So we require structure to tell us what it needs to do. On a daily basis, this is an intermediate term high, right? Intermediate term low. That is your target. So in between, you have short-term highs that are holding. Now, is that a fair value gap? It is. Beautiful. And that is what? That daily fair value gap is what? It's overlapping with what we just saw, that 4 hour high that doesn't have a fair value gap in it. That range, that short-term range without a fair value gap. So it's not a short-term range. But this sweep could then happen to continue lower. And this is exactly, you could even call this a top-down because I just did a top-down analysis here. So I hope that makes sense. And this is how you combine. And all you now need to do is you wait for it to come right there and you go into your lower time frame entry pattern time frame. Wait, I butchered that sentence. You go into the lower time frame, whichever time frame it is, can be the 15 minute, can be the 5 minute, can be the 1 hour, can be the 1 minute. Just know if I am using a 4 hour premium array or a daily premium array, there are both. So in that case, what I would do is I would go with the higher time frame. So I would go up in time frames for my entry confirmation. Just know, the lower your time frame confirmation, the 1 minute requires more confirmation there. So you would need more structure. So what you can see on the lower time frame right there is if we go up or we go into the 1 minute, there's a lot of intermediate term highs. There's a lot of intermediate term lows. There's a lot of short-term lows. There's a lot of short-term highs. It's very confusing because there's no first context. If we use the 15 minute, for example, and we come into that daily fair value gap, then it becomes quite easy because then we can work with structure. We have an intermediate term low right there. That is our first target, but just below that, there's another target. So if it reaches for that low, will it likely reach for that low as well? Yes, of course it will. So right there, what we can do once it comes into that daily fair value gap and that high, of course, then you wait for, not in this case, I would not wait for an ST. If you were trading the 1 hour, yes, an ST is enough. Here you wait for your intermediate term high already being confirmed. Your intermediate term high gets confirmed when this leg has a fair value gap lower. Then that second leg, so here a swing high gets created at a premium array most likely. Then that leg, that short-term range, has another fair value gap lower. That is confirmed. I can't say too much because this is all mentorship stuff, but yeah, I can't say too much, but that is your confirmed. It's confirmed that it's heading lower. Let me tell you that. Just a little nugget for you. So then from there, another premium array can be a fair value gap, can be overlapping PD array, whatever you want to enter on. But if you want to enter on it, just know that you need the same thing that you can repeat. Believe me, when I show you my entries and when I go through my trade recaps, I am constantly doing the same thing. It's not rocket science. I don't jump into the chart, and that's what a lot of people think. And I'll finish the weekly forecast. Don't worry, just let me finish my rant. A lot of people think, traders, they come into the market and they just think, I can smell that the market is bullish. My emotions are telling me, it might be bullish. No, there's a step-by-step process that we go over to get to, first off, a bullish bias. So you could argue there is a mechanical manner that we use on how to know if the drawn liquidity is bullish or bearish. And it's just by comparing arguments. Because what you do is you're essentially doing, getting to a drawn liquidity is comparing bullish with bearish arguments. Are there more bullish arguments to be made or more bearish arguments to be made? You want to have 100% of either one of them. Either 100% bullish, either 100% bearish. That is when you have the highest probability drawn liquidity. Then the next step is knowing where and when to get involved. I know I want to get involved right there on that daily fair value gap with that high right there. But the most important part is that daily fair value gap. That's the most relevant thing. So I know when to look for my entry, because when that gets hit, I'm looking for my entry. Now I know exactly as well what my entry pattern already is. I know personally my entry pattern, like the back of my hand. It's without, let me think how I can frame my entry pattern without going into mentorship details. You know about ST. So it's ST, another fair value gap lower. That's my entry. That's it. And then I know my break-even rules. I know my stop-loss rules. Like, yeah, it's not like people, when you see people doing well in trading on Twitter, on Instagram, it's not like they are showing up to the market and they have no clue what they're about to do. The people that do have a clue what they are about to do, those are the people that are making a lot of money. Those are the people that know what they're doing because they have guidelines. They have guidelines to tell them, I should now do this, I should now do that. And that's why the question that we had in the beginning from the person that came from basic SMC to now liquidity trading, and he asked me about some tips on top-down analysis. That's why it's so funny, because it was funny to me. It's not a funny question. It's a great question. It was funny to me because I remember the days when I just had a whole list of what I was supposed to do in my pre-analysis, and I didn't do anything because the list was too long. I couldn't be bothered reading that whole list. And it was only once I had some rules, some simple rules. It doesn't have to be that difficult. And the thing you need to understand with a trading plan, with an entry pattern, you are always sacrificing something. You're always picking your poison. Because an entry pattern, your entry pattern, if you're always entering on an overlapping PD array, it might not always get hit and it might just run without you. That's something you have to deal with. You can't catch everything. Even though I know I've been there, I would love to catch everything. I would love to, but you can't. You can't. And in that sense, it truly is less is more. Less is always more. Just focus on the things that you can stick to consistently. So Right there could be an entry, and then you continue lower. Would be lovely if this plays out as well next week. We'll keep an eye on it, all right? I'll share it in the Telegram as well if it does happen. And if it doesn't happen and I'm wrong, I'll just delete my YouTube. I'm joking. So yeah, that's what I'm expecting for DAX. That could be nice. Then on NASDAQ right here, what are we seeing? We expect lower prices. This is where I did the markups for the videos as well. Now, the thing right here is there's not a clear intermediate term high being created after we took that low. And what I mean by that is, yes, this from an objective standpoint, this is an intermediate term high, right? But this, it didn't have a nice retracement, as in it didn't even reach that low. That's what I mean with a nice retracement. It didn't come into that low. So once you see this, the clear intermediate term high, the clear outsider high is still, if you go up in time frames, it's that high, right? It's still that high. So again, does that mean that you can't trade looking for bullish prices until we reach that high and then we look for bullish prices? No, absolutely not. That's not the case, right? Just know that when we do come into a 4-hour fair value gap or anything right there, just know that you might see a lot of resistance because overall order flow and structure is still bearish. That's how you can frame as well the high probability, because the highest probability is looking for shorts here, not longs. Reason being for that is because there's way more bearish arguments than there's bullish arguments right there, right? Everyone can see that. Even someone that doesn't trade could see that there's more bearish arguments right there than bullish arguments. So which one is the highest probability? It's bearish. That's as easy as it is, right? So again, also in a monthly fair value gap, something to take into account, but the only thing is, like, that becomes relevant once we have a bullish price action to support that ID. So right here, we could still reach for that weekly fair value gap right there in next coming week. So on a daily, if we are continuing lower, then I do quite like this fair value gap overlapping with that low as well that we were coming below. So I do quite like that. That could be nice to reach for those equal lows as well on the daily time frame. But the most relevant thing that I use right there is a weekly fair value gap. So yeah, that could be nice. Do we have something on a 4-hour? Again, if you're quite new here, mostly on the weekly forecast, I go over the daily and weekly because that gives me an indication on where it wants to head towards. Throughout the week, you will see, if you're in the mentorship as well, you will see me go more into the 4-hour time frame. That is the higher time frame. Everything 4-hour and above, that's higher time frame. And 1 hour, I use it in specific cases. If I'm only trading one pair, for example, or I'm only focusing on one instrument. So yeah, this lines up nicely with that fair value gap as well. So yeah, could be nice. Then on YM, we now this is interesting because right here we reached that drawn liquidity that we had set out last week, but does it show any signs of respect to you currently? This, by the way, by the looks of it, had quite nice Thank God It's Friday setup, reaching into that fair value gap as well. But does it show any signs of respect currently to you? To me, it doesn't. Like, it's not respecting this at all because 1, 2 candles, that third candle is only rejecting because it's a Friday. So I don't take that seriously. If it wanted to seriously move higher, Wednesday and Thursday would have rejected, not Friday. Like, Friday is normal. It will reject. But that Wednesday and Thursday are not rejecting at all. Like, nothing at all. So right there, I would argue that this daily fair value gap could be responsible for a push lower to those equal lows right there. Do we have something on the weekly order block? So again, if it does want to continue higher right there, it can continue higher off of this order block for value gap as well. So you can see there are some bullish arguments to be made. Yes, there are. There certainly are. But the way we reject on the daily, you can see that just based off of this, I would prefer to trade ES and NASDAQ. Only reason being is because there's like 80% bearish arguments. On ES, it was like 100% almost bearish arguments. So that is how I get to the pair that I want to trade, or the instrument. Sorry, it's not a pair, it's an instrument used to forex. So yeah, this is something that could very well happen. All right, Australian dollar, US dollar. Let me see what is going on. By the looks of this, obviously, I do think that we might, in the long term, heading towards that low as well. And eventually, potentially, even that low. That's COVID lows. Or am I saying something stupid? No, I do think those are COVID lows. But that's a long way. Like, will we reach that? I don't know. Probably not for the next 2 years, but... Oh. Excuse me. So right here, what I would expect is we could leave behind next week a fair value gap. The same as we saw on the dollar as well, is we can leave behind a weekly fair value gap right there. So next week, is it as high probability as we mentioned the week before? No, absolutely not. It's not. Because this daily fair value gap with that target right there, that was still perfect. It was perfect. But this right there, once we reach that target, is it as high probability as last week? No, it's not. It's just not anymore. And the reason being for that is because the context is now gone. Because the context was that low. So everything in between that high, and this was as well mentioned in the structure video, that high, that intermediate term high to that low, well, this is not an intermediate term high on this time frame, to that low right there, that is your context. So right there on the daily time frame, you have short-term high, short-term high, short-term high right there, short-term high. That is your highest probability price action. That is as high probability as it can get. And when we dissect it even more, so if I remove this, then what I mean with context, again, this is the same, right? You have this daily fair value gap to, that is a premium array on the daily time frame, premium array. If we reach a premium array, price will target what? An opposing discount array. The first discount array is almost guaranteed that it will target that. So this is your first discount array. Now that doesn't seem like a lot. On the 1 minute time frame, that's an insane amount of price action, right? So if I go into just the 4 hour as well, or the 1 hour, on the 1 hour, what do we see? A beautiful ST model. Can you see how combining the time frames gets you to a beautiful price action? This is exactly what we would call a one-shot, one kill in the mentorship. Now, maybe I'm giving out too much information, but on the 15 minute, what do we see? Intermediate term low, intermediate term high right there. In between, you have short-term highs constantly, and they are holding. That is exactly what you would want to see. So if we start off with this, that is an early ST. Now, on the 15-minute time frame, I would not take that. But right there, after that is a nice entry. After that, and then once you understand the structure and the structure video and the context, the entries become very easy. Like, the entries are not the problem. It's the entries are, I would argue, the most easiest things on earth. Then right there you have another entry, because all you're doing is you have a choice, right? That after that you have a choice, as in, what do you want to enter on? What do you prefer? Do you want to enter on the fair value gap? Do you want to enter on the overlapping PD array? Choose one, stick to it, pick your poison. Because sometimes it will not come all the way into the overlapping PD array, and it will just head lower from this small fair value gap. If that happens, don't change your trading plan, because you already picked your poison. So stick to the poison, and it makes you immune for the other things, I would say. So yeah. Then after we have that high, you could argue even that high, but in this case, when we have that high and that high, I would just personally take that high. Then is this a swing high? I don't believe it is. So then this is your next short-term high, and then afterwards, this is your next short-term high, or sorry, this one. And afterwards that one. So then the entries, like, again, it's up to you. It's up to you. What do you want to enter on? And this week we will be going over swing grades. And the beautiful thing, let me go over swing grades just really quick, because I can't resist it. I would love to go over it right now. So you draw your swing grades from Oh, I actually have them. Oh, these are the quadrants, but it's the same. So you draw your swing rates, your Fibonacci tool, from the intermediate term high to the intermediate term low, aka that premium array or that high, which came into the premium array, to the target, which was the first opposing discount rate on the daily time frame. Then afterwards, you will see that entry opportunities will likely happen at 25%, or this is, 25%, then this is equilibrium. So that is where you can see consolidation. And this right there, once we get closer to that drawn liquidity, what we mentioned as well in the fair value gap video is that right there, you will see that only fair value gaps is what it will retrace into most likely, and not coming back into overlapping PD rays anymore. So can you make mechanical rules around that? Yes. Once we are in the opposing end of the equilibrium, so we are in premium and then we are in discount. In discount, we are likely not reaching into overlapping PD rays anymore and only reaching into fair value gaps itself. That is how you can make objective rules around it. So yeah. And right here, you can see the difference between that premium, we are reaching into overlapping PD rays, and then we are reaching only into fair value gaps. Beautiful how much you can rant about such small things, right? It's beautiful. I like trading. I love it. So what was I actually saying about the weekly forecast? Yeah, I was expecting lower prices still, but it's a bit, it's not as high probability anymore. And it's a bit, how do you call it? It's a bit iffy, a bit not too sure what I want to do, a bit 50-50 right there. Of course, still bearish, but the only thing is we need a new premium array to go lower from, and we've been expanding lower. So if we've been expanding lower, we obviously don't want to chase the expansion. We want to get involved in the retracement and ride the expansion. That is important. So once we have a retracement, we can ride the expansion again. But the retracement might take a while. Again, trading the retracement is always lower probability. You can trade it for sure. But you can also expect to lose a lot of money doing that. So I would always advise just trade the expansion lower again. Not trying to trade the retracement. EU. All right, what is happening on EU? Still a pretty clear target, in my opinion, that low right there. So that is something we will likely touch or we will likely trade into next week. Again, this fair value gap is now, for me, it's out of play. It's not relevant anymore. It's somewhat relevant if we create bullish prices, that can be a target, but this is not something I'm looking at to continue lower from right now. Reason being, again, that is a way too big of a retracement to happen and then continue lower. That's not something I would like to see happen. So in that case, it's the same story as that we had on the dollar. Well, on the 4 hour, we already have a nice premium array in the form of that order block with that fair value gap that we can head lower from. Only thing is, Monday doesn't have any news. So Monday might not have the volatility for that week. So then the thing is, we can reach a little bit higher and then continue lower. That is something that could happen. So in that case, you already know as well. I tell you, when there is a fair value gap in the leg will likely hold, or there's a higher probability of the leg holding. In certain conditions, when Monday doesn't have any news, we do have a leg that was created on Friday right there, then that leg might still get swept. That is how you can know that, right? So that is what I would be looking at, and I would probably just be waiting until we do have a clear premium array to head lower from. GU. Now this is an interesting one because this one is in seek and destroy conditions right now. This is not one that I would be trading actively right now. Again, it's just very, very rangy. If you are a seek and destroy trader, your time to shine. Draw your quadrants and make some money. It's your time to shine. But personally, I would not get involved here. I would wait until we either have a displacement higher or a displacement lower. Yes, based on the dollar, we can say, all right, we are likely heading lower, right? But again, it's that trust issue. When someone cheats on you once, you get fooled, right? But if someone cheats on you again, like, it's, why are you staying with the same person, right? It's a bit idiotic. So I don't want to get involved in your personal life, but all right, that's how I would view it. And what I mean by that is it's failing to follow through once, and then it fails to follow through twice. So yeah, obviously, because it failed to follow through the first time. So why would you try to trade it again, right? It doesn't make any sense, right? So that's how I would view it. Yeah. So this I would not touch at all, but I'm still bearish on it. If I was to get involved, I would still wait for a nice premium rate to head lower from. Right here, huge expansion, not any fair value gaps, which I don't like. No daily fair value gaps higher. We do have weekly fair value gaps higher, but we are already close to the draw on liquidity. So again, then same question. Will we do something like this and then head higher whilst we are pretty close to draw on liquidity? I'm not too sure. I don't think that is very logical. If it does happen though, again, if it does happen, then I would expect higher prices off of that fair value gap. But is it logical to happen? Not really. So right here, I would again look at potentially the 4 hour. 4 hours, a nice order block right there that we can head higher from. Nothing too clear. Like there's no clear discount erase that we can head higher from. If we do have new fair value gaps higher, then I would like to get involved in that with still the same draw liquidity that high right there. USDJPY. Yes, this one is nice. I like this. So the first thing I noticed on the daily time frame is that we have that fair value gap overlapping with that high, and we close above that high as well. So based on the fair value gap video, what are we doing? We are likely continuing higher, right? Either off of that fair value gap already, but since Friday came into that, I do think that the beginning of the week, especially Monday, doesn't have any news. So it can do something like this and then come into what is below that, a weekly fair value gap, which the close is pretty nice. So we can sting into that and then continue higher. I do quite like that. I like this one a lot. So I'm adding it to my list personally. We'll take a look at it as well as DUX as well. Right there. So yeah, this is one I do quite like, heading higher off of that weekly fair value gap. And you can see how easy it was here to get to my draw liquidity, to get to my bias, to get to where we likely heading higher from. It came easy, and that's exactly what you would want to see when trying to pick a pair. So silver, again, pretty clear draw liquidity in form of that low, but I just don't like the premium erase. That's what I don't like. So we did mark out that high last week already. This high that it could get swept because we have no fair value gap lower. If we are heading lower, then likely this high getting swept or even coming into that fair value gap and that order block, but then I would want to see an immediate rejection lower. Right here, we could already reject lower. So on the 4 hour time frame, what are we seeing? Nothing much. We're also not expanding higher just yet. So it's a bit in the middle. We do have bearish fair value gaps to work with. Then that could be very nice. Could be very nice. When in doubt, just wait for fair value gaps. That's all it is, really. So right here, again, still expecting lower prices to that draw liquidity right there, which gold already reached. Now for gold, it's quite interesting because in gold, we are also potentially creating a weekly fair value gap. But if we're heading lower, again, we have no fair value gaps to work with, which is absolutely shitty. I don't like that at all. But I would want it to see respect that low with an overlapping fair value gap. So, it already did right there. It can do something like this, but I would want to see an immediate rejection lower again right there. So again, lower prices is what I would expect. Bitcoin. Hey, Bitcoin is doing something. And then afterwards, it's going into a long consolidation again. So Bitcoin is actually rejecting right there. It didn't come into that monthly SIBI right there, which is interesting. It can sweep that low, of course, because we don't have fair value gap in that leg higher. So it can sweep that low. Again, Bitcoin, it's very unclear to me what it wants to do right here. Again, the only target I would still have is that monthly SIBI right there. And then just wait for bullish prices to support the ID on the daily time frame. So something where structure can form intermediate term low. You have your short term lows as well. That is what I would expect and what I would want to see. All right. Ooh, let me go over a few things. Let me see. Where was I? There's a lot of A lot of things said. What's up? What's up? What's up? I'm up 4% on my challenge this month. Is this okay with ST model to be like this? For sure. That is perfect. 4%. That is, if you put it in perspective, that's a crazy amount. That is for sure. That is perfect. How will Essentials class help if everything is on the A to Z guide? Oh, not everything is on the A to Z guide, my friend. The Essentials and the Masterclass is it's next level. It's truly next level. Like if you're surprised by the A to Z guide, then yeah, the what is it? The Essentials and the Masterclass is even more advanced. Even more advanced. Insane video on Mark Stuck, your great reflection. Love it, Zeus, my brother, my guy. MMT member, let's go. I understand. I see concept 3. Love to hear it. Love to hear it. Love it. Let's go. Can you please tell us how we apply for the mentorship 25th August? There's a wait list on WAP itself. There's a wait list. You can join that, or you can wait for 25th of August. And on the 25th of August, I will also just open it fully, likely for just once it's full. So right now there are 5 spots left. If these spots are gone at that time, then I will close it again. So that can either be a weekend, can be a day, like whatever the demand is. Let me see. Is DAX same as indices or Forex when it comes to the time aspect? Yes, indices is the same as indices. Only thing is, like in London, once DAX fully opens, or the London open, like at 3 a.m. on DAX is insane. It's like equities open for ES and Nasdaq and YM. You have that at 3 a.m. for DAX. I used to trade it a lot, so yeah. Let me see. Please elaborate on the first line of defense and last line of defense ending with ST model. Yeah, sure. Sure. So it's essentially pretty easy. If we go to the, let's see, if we go to this chart, if we had a premium array right there, which we could argue premium array, then this is your ST, right? This is your ST, that bearish value gap. This is your first line of defense. That is your first line of defense. Last line of defense is this. Is this. That's your first line of defense, last line of defense. And you would preferably argue on, preferably enter on the first line of defense, because that is likely where we are going lower from that fair value gap. No worries, Eric. Missed the start of the stream. No worries. That's exactly why we do it here, so we can record it and it's just uploaded afterwards. No worries. Alright, which RR you prefer with ST? I usually aim for around 1 to 2 RR personally, but that there's a lot of variables going into that, like the target, etc. For example, here, if I was to enter off of that ST, then my target would be that. I notice it's a 3R, so I would also be content with targeting that fair value gap. That is a 2.4R. That's what I'm content with. As long as it's a minimum 1 to 2 for me, like that's perfect. That's perfect. Since institutional level orders are based on around round-up numbers, is it a good idea to place our stop loss at an odd number so that we won't be stopped out? Well, yeah and no, that could help, but the way I would see it is I would just place my stop loss at, normally it's the last line of defense, so it's whatever swing high gets created. For example, if I was to enter off of that, I would place my stop loss there. If I was to enter off of this, I would place my stop loss there. And then you don't really need to go very specific with the numbers. But what you can do is you, of course, can do gather data on it. So if you do get stopped out, notice where your stop loss was. Is it beneficial for you to round it up or use an odd number, etc. But you likely won't be targeted. Like, don't worry, you will not be targeted by by institutions. No need to worry about that. Let me see. It rebalances a fair value gap. Why isn't it intermediate to highs? Yeah. So the thing is, just to make it clear, because I believe I didn't really make it clear in the video. That's the only thing that I was a bit disappointed about in the video because I didn't make it clear that ICT uses long-term high, long-term low, and he uses intermediate-term high there, and an intermediate-term high he defines as a rebalancing a fair value gap. Long-term high, long-term low, and an intermediate-term high that rebalances a fair value gap are very vague, in my opinion. To make it easier and to make it actually the same and even, well, you could argue even better, it's what you prefer. In my opinion, it's better because this is an intermediate-term high according to ICT's rules then, and this is also an intermediate-term high. But these highs are not protected when we are retracing. So what is the difference between that intermediate-term high and that intermediate-term high? It becomes very vague. So in that sense, that short-term high could just be defined as coming into that premium array and having a fair value gap lower. That is your short-term high. That is what you would want to see regardless. And then the intermediate-term high is just that high. That's as easy as it gets, right? That's just very clear, very objective, and easier to understand, because then you would have to argue, all right, what is a long-term high? What is a long-term low? What is this? What is that? Like it becomes very vague. Like, and those are things that you can leave out of your trading. You don't need it. And that's with a lot of things, I would argue. It's the same as with a market maker model. A market maker model is beautiful, don't get me wrong, but you can leave a lot of things out of it and you can achieve the exact same thing that you wanted to achieve, which is just trading and understanding it, which is exactly what we're doing here. But you're not making it yourself so super difficult. The only reason why I believe people like to make it very difficult is because then it truly looks, or seems, not looks, it seems very interesting because it's hard to understand. But it doesn't have to be that hard to understand. And that's why I mentioned in the video as well. To get to a level of understanding that we achieve with the money making team, it's way harder than for me to sit here and say you need to use the swing grade of the Reaper, of the Equilibrium, of the Enigma, this, that. Like, that is easy. If you can't convince, just confuse people. Someone mentioned that on Twitter to me. If you can't convince, just confuse people. And that's exactly what I feel like a lot of people are doing. They can't convince you with just their skill or anything, so they just confuse the absolute shit out of you. And it's like, yeah, he must be right because I can't understand what he's talking about, so he must be right. So yeah, that's how I view it. And this little rant started from just a great question. Yeah. These are the best. Thank you. No worries, these sharks. Great to see you again, my friend. Great to see you. Man is leaking some secret sauce. All the secret sauce. It's all over the floor. Let me see. So a new intermediate term high, intermediate low is formed after taking out a previous intermediate term high, intermediate low. Is that only what made you pick the intermediate term high with the fair value gap on 40? Yeah, that's essentially what it is, right? Like if we go back to DAX on the 4 hour, this, you could argue people that wouldn't use my concepts, or not, I don't like to claim the concepts, I just have found some discoveries in it, like of course ICT, bless him, very grateful. But right here you could argue this is an intermediate term high, but it's not an intermediate term high because the intermediate term high forms after taking that intermediate term low. So you have that target of that premium array to that discount array. Once we take that discount array in the form of that swing low, which, let me elaborate on that, it's this premium array fair value gap to the first discount array that we encounter, which is that swing low right there. So in that sense, a new intermediate term high only forms after taking that target. So it only forms after taking that intermediate term low. That makes sense. If that makes sense. Let me see. Oh, where was I? Let me see. What's up, Rajesh? How you doing, brother? Great to see you here. Great to see you. Great to see you. Is CBDC gonna end Forex? It's a great question. And I think I answered the question as well under the YouTube video. It might end Forex as we know it. Let's put it that way. But will it completely end trading? Will it completely end foreign currencies? Nah, I don't think so. I don't think it will. There will always be something to trade. So that's the least of our concerns, I believe. So yeah. It's yeah, nothing to worry about. Nothing. If you're interested in it, you can check out international. What is it? International Bank for Settlements. Bank for International Settlements. One of those two. Did we get a super chat? That is the first time I've ever had that. That is insane, my friend. You don't need to do that at all. You don't need to do that. That is crazy. Thank you for that, my brother. That is crazy. What? Thank you for that. That is crazy. That is crazy. You don't need to do that, please. Like, you can just ask your questions whatever you want here. Like, there's no need. Absolutely no need. Where was I? Where was I? How would you explain to 6-year-old what is accumulation and what is distribution or reaccumulation and redistribution? That is a great question. Ooh, you're testing me. You're putting me to my limits. Accumulation. Accumulation is a start. Reaccumulation is the follow-up. And what I mean by that is when we have come down, we've come down. This is where price is accumulating. Then we go higher. And reaccumulation happens after an accumulation, because otherwise it wouldn't be a reaccumulation. It's a re. The re indicates that something already happened. That's the same with a re-entry. The re indicates that an entry already occurred. That is why it's a re-entry. So, but to really define accumulation, like, it's just stacking up orders. It's stacking something. It is whatever it can be. Like, you can think of anything accumulation, but in this case, it's of course stacking up orders to continue higher, to go higher. It's preparing some orders to go higher. So whatever it's preparing, right? I hope that makes sense. And distribution is just the inverse. It's just inversed. Where was I? Question about that reaction, ST and FG lower. I find it often the FG doesn't hold and the drawn liquidity continues higher. Does the rule not apply for 5-minute time frame? Yeah. So for everyone that's here currently, it is very important to understand that the ST is beautiful, but you need to be able to combine it the right way, because if you can't combine it, you will get absolutely blown away and you will lose all that you love. Because if you're taking 1-minute STs from a 4-hour fair value gap, for example, then no, that won't work. It just won't work. You need to get very lucky for that to work. So the odds are not in your favor. But if you're using 15-minute STs with a 4-hour fair value gap, that can work. And again, the second entry is, of course, a higher probability, but that can work. Oh, that makes sense. Let me see what. Let me see. Where was I? No way. No way. Did this guy just donate to me 20 pounds? That is absolutely insane, my friend. What the... Bro, please understand, like, there's no need. I don't need your money, please. Like, Future FX, my friend, please. That is absolutely insane. Thank you a lot for that, man. I appreciate that a lot. That is crazy. That is crazy. That is insane. I'm speechless about that. You got me. I lost my train of thought just because of that. That is absolutely insane, man. That is absolutely insane. I just wanted to go over a question, but I completely lost it. Yeah, it's a Dutch question. Is it possible to test the mark structure from the last video on EU on the 1 hour on the 1st of August? Man, that is absolutely insane, Future Effects. You are an amazing human being, my friend. That is crazy. That is absolutely crazy. Wow. Yes, I can't say enough. Like, again, please, everyone, understand. Like, you don't have to do that. Like, you don't have to. Like, it's completely free. This. And that's why I like to do it. I don't need any money. Like, please. But yeah, thank you for that, man. That's absolutely insane. Can't thank you enough. So, yeah, where was I? All right, the structure on EU on the 1st of August. So right here, what are we seeing? We are seeing, let me get some higher time frame context as well. Where were we? On the weekly, we are coming off of that. Oh, this is nice. A weekly coming off of that weekly survival gap, targeting that weekly low right there. Then on the daily, what are we seeing? Nothing much just yet. Oh, this is where this is why I don't like replay too, because see, here it already came into that weekly, but on the real time, we didn't come into it yet. So that would be a target right there. So that weekly fair value gap is now a target. The whole situation turns around. It's completely different, because when we have that weekly fair value gap right there, that is a target. So I would look for bullish prices right there. Then on a 4-hour, we have that 4-hour fair value gap. Again, we have this 4-hour fair value gap to work with, but ask yourself the question. That weekly fair value gap is the strongest magnet in close proximity to price. So what I mean by that is this will attract price. This will be the magnet. So you can trade to it and you can trade away from it. So once we reach it, you can also trade away from it. So then on a 1 hour, what do we see? First off, we have structure here, but you can see the reason I got to context and the reason why I wanted to see the context first is because that is very important for me. And the reason being, because otherwise I'm trading structure in the middle of nowhere. And that is crucial for me, because yes, this is an intermediate term high right there, but it's in the middle of nowhere. It's not formed at a premium array that in the form of a daily premium array or 4-hour even or a weekly even. Then it's very, very clueless for me. I'm on the 8th of August. I'm an idiot. I'm sorry. This is the 1st of August. Yes. Perfect. Let me go over the same premise again. I'm sorry about that. Got me confused. The super chat got me confused. No. I got myself confused. So right here. All right. Well, what are we seeing? Then this would be your target. Sorry about that. Then this would be your target. Yeah, perfect. So what are we seeing? Again, we are having this intermediate term high or this intermediate term high, because this one is higher than that one. So this is not really your intermediate term high. It's this one right there. Then afterwards, we have a few short-term highs right there as well that are not holding. They're getting swept right there. After we have this short-term high right there in the form of that new range lower, then this one as well. So this is the last one. Then the first thing I imagine once we see this is if we go up time frames, we have a fair value gap on the 4-hour right above it. The whole rant that I did is actually beneficial here, because now you can see the same exact thing. We have this 4-hour fair value gap, but what's above it? A weekly fair value gap. We have this, we had this 1-hour fair value gap, but what's above it? A 4-hour fair value gap. So again, you can take this trade, but just be aware there's a 4-hour fair value gap. So it might want to come into that first before it's heading lower. And that's the whole context on the 4-hour here. It's this high is protected. This high is protected because that is the fair value gap. This high is not protected. So that can be swept to continue lower. So on the 1-hour, yes, you might get blindsided in some form right here. But on the 4-hour, I mentioned it in a very early video in the HC guide, I believe. Whenever we have a fair value gap in the leg, there's a high probability chance of it holding. The only reason or the only way, usually what happens is when a fair value gap, my train of thought is absolutely gone, but when we have a short-term range that has a fair value gap in the leg, usually when it doesn't hold, there's a fair value gap just above it. There's a fair value gap above that. So then afterwards, you would just continue with the short-term highs, not an intermediate term high, just continue with the short-term highs. Then right there, we have new fair value gap. This could already be an early entry. I like it. And then afterwards, we just deliver into that. The reason I say that is not an intermediate term high is because I would prefer this one over that one, because the same premise, we didn't take that target just yet. So that's how I would view it. Hope that makes sense. Let me see. Where was I? My train of thought is like, well, it's gone. Hey, what's up, Trey Jordan? What's up, my friend? How are you doing? Long time no see. Love to see it, my friend. Love to see it. That's an OG, Trey Jordan. It's an OG. like a real OG, even before I did anything on social media. Elaborate on daily high low closes for sure. Let me go over it. So yeah, that's OHLC, or in other words, AMD or Power 3. And the reason why I say it's not relevant is because usually what happens when you have an AMD cycle, like for example, this week, why do I have this on my chart? Interesting. Then when we have an AMD cycle, let me fully explain this. You wouldn't even do that. Like the AMD cycle, you would mark the open of the weekly candle right there. And that's this is daily, but this is weekly, but you can also apply this to whatever you want, right? To weekly candles, it's all the same. So right here, you would mark that open and you would expect a move first up and then a move down. The reason why I think is flawed, it's flawed, is this is a perfect example. Because right here, we don't move up first. We first move down. Now, the beautiful thing is that if you had that weekly fair value gap marked only, you would not, that whole Power 3, that whole OHLC, that's irrelevant. The only thing you're waiting for there is coming into that weekly fair value gap. And once you see that, we're coming into a premium array or discount rate, can be on a daily as well, then that's the only thing relevant, because that Power 3 will form regardless whether you pay attention to it or not. I know I made a video on it just because if someone likes to use it, you can use it. But if you're using the method that I use, just this premium rate to that discount rate, then the Power 3 is completely irrelevant. It's completely irrelevant because it happens regardless whether you pay attention to it or not. It's not relevant for you to use. And yeah, that's with what happens a lot of times. So same example right here on this daily fair value gap right there. It comes into that Power 3, it's irrelevant. The only thing relevant is that we are coming into the daily fair value gap and continuing lower. It's the same with, you wouldn't use OHLC on, it might be a good guideline if you're just starting out, don't get me wrong, but you wouldn't use it on the 5-minute time frame. Why wouldn't you use it? Because you're just expecting higher prices off of just a certain discount or premium array, or lower price of a premium array, of course. So it's not relevant on the 5-minute time frame. So why is it relevant on the higher time frame if the market is fractal, right? Unless you're trading the 1 second time frame. But even then it's also not relevant, right? So yeah, that's how I view it. Yeah. Thank you, Eric. Appreciate it a lot. Appreciate that a lot. When do you trade DAX? I have not been trading DAX for a long time, but around this time, I think I made some videos on it as well. I was trading DAX like a lot around that time. And sometimes when it's clean, I like to look at it, but haven't executed on it in a long time. So yeah. Let me see. That's the point. I don't understand as day trader or scalp why 1 hour fair value gap is not relevant for a trade. Did I say that? Did I say the 1 hour fair value gap is not relevant? Because then I was wrong. The 1 hour fair value gaps are very relevant for a day trader or scalper, but I don't remember or don't recall myself saying that. What do you think about the next day model? I'm not sure what it is, my friend. I'm not sure what it is. I believe it's either T-Trades or market maker model trader. If it's one of those guys, then it's guaranteed to be a great thing. So it's probably great. Yeah. How will the Essentials mentorship help me if everything is on the A to Z guide? Also, what is a realistic win rate and monthly return to aim for in your opinion? The Essentials it's different from the A to Z guide. Like, yes, the concepts, the ideas are the same, but the way we combine everything in the Essentials mentorship and the Masterclass mentorship, it's completely different than from the A to Z guide. Like, the A to Z guide is just the tip of the iceberg, really. What is a realistic win rate and monthly return to aim for in your opinion? So I would always advise to first start off with 1 to 2 RR. If you start off with 1 to 2 RR with the concept that I'm teaching, then just starting out, a 50% win rate is completely realistic. You can, if you stick to the same thing, easily scale that up to 70-80%. That's where I'm around. And even if you're getting better than me, which is very, very doable, then you can scale that up to what 90% if you truly master it eventually. Like, sky's the limit. 100% I wouldn't say so, but you can get very crazy with it. 100%. And monthly return, 100% no. No, I'm joking. A monthly return, a realistic return that you can consistently reach, I would say around 6%. 6% a month, 8% a month as well is doable, I would say. But around that, it consistently. Like, you will sometimes have months where you reach 15%, but sometimes you will have months where you only have 4%. So on average, I would say 6 to 8%. Yeah. Hey bro, what if spots get filled before 25th itself? I'm joining on 23rd, 24th August. I would love to have you as mentor. I believe things get easy once, right? Yeah, for sure. Sure. If they do get filled, like just send me an email. Send me an email with your name, and I'll be able to make sort of a reservation for you. So yeah. Just give me a heads up. That's the most important part. How are you doing, bro? I'm doing great. I'm doing fantastic. Thank you for asking, brother. How are you doing? How are you? Where was I? I believe I have already answered some of these. Lots of lessons today. Thank you, Art. No, thank you, my friend. Thank you. And again, if you want lots of lessons, it's asking the right questions. That's 90% of the job. Like, and it's because you all ask amazing questions, then I can do my renting, and eventually we will all learn something. Let me see. Where was I? I'm lost. A stupid question. There are no stupid questions, my friend. Never, never, never. Although sometimes I would argue, like, there are no stupid questions, but there are irrelevant questions where the answer is already obvious. But I'm sorry. Let me go over the question. When you explain things such as kill zones, you normally differentiate between FX market and instance market. What about a gold? Ooh, that's actually a great question, my friend. That's not a stupid question at all. Should we consider as FX? Is it paired with US dollar? Yes. I would pair it with FX. Exactly. Yeah. It's a great question. Great question. Just sign up, man. Love to see it, Future FX. Can't wait to get to work, my friend. Can't wait to get to work. Love to see it, my friend. Love it, love it, love it. Love it. It makes me very happy. I don't know. Is it possible for me to get my market structure analysis review so I can? Yeah, for sure. The best thing you can do if you want. I know I get a lot of DMs on Instagram and Twitter, so yeah, I see the following thing. I see Indian FX, bro. Why don't you reply on IG? I'm going through the questions that I had on my story yesterday. But if you want an answer to a question, the best thing you can do is email me. Like, that's what I read almost daily. So this is my email. Again, don't spam it, please. But then I might ignore you. But yeah, that's where you will get my most answers. Like, my Instagram and my Twitter, it's so completely full that it's very difficult for me because if I answer one person, then I need to answer the second one, and when I answer the second one, the first person that I answer to is already replied. So it's like having conversations with 100 people at once. It's very difficult. So yeah. How do you trade volume events like I trade in Nifty and forms multiple volume events? How should I treat them or just ignore? It's a great question, my friend. And what I would do if we go to Nifty, I would ignore the gaps and only use fair value gaps. Oh, this actually played out very nice on what we forecasted. Was it last week? Did we forecast it last week? I'm not sure. But this played out very nice. And what I would do is ignore these gaps. Just know that there's a fair value gap. So this is not relevant. The only thing relevant is from that area to, yeah, you could say this area, where the fair value gap is supposed to be. That is what's relevant. The rest is not, like, I would just ignore. Like, these gaps, no, I wouldn't really use them. I would just use the fair value gap. If that makes sense. Hey bro, after joining men's masterclass, will there be given funds to trade after learning and having experience? That is the plan. That is the plan. Again, I can't guarantee you anything. So no, you will not be given funds in the first place. But that is the plan on the long term. Yes, to supply everyone with funds. That is the plan. But again, not yet. Not yet. Do you trade gold? I don't trade gold, my friend. I don't. I do look at it quite often. I it's pretty clean actually, quite often as well. But I don't trade it personally. I traded it like a couple of years ago. Can you give some advice on trading gold? I'm not laughing at you. I'm laughing at the fact that usually the thing where people mess up is with trading gold is that they go all out, and gold is crazy. Gold when you're just starting out, like gold and Dow are the ones that most people advise like stay away from them because they're crazy. And you don't need to stay away from them. You can trade them perfectly fine as long as you know what you're doing and you have an appropriate lot size. Then it's fine. It's fine. Yeah. I'm seeing Indian effect. Keep me as your assistant to reply socials. I think it's time to increase the team. Just yeah, you're not kidding. I know you're not kidding, and I've also thought of that. So it might be something in the future. Yeah, it might be something. It's a great suggestion. Like, it's a great suggestion for sure. Where was I? Nifty. Yeah. Wait, let me go over Nifty. I missed Nifty indeed. I need to add Nifty to the list actually. Remind me the next time, please. Right here, what I would expect, just lower prices off of these order blocks right there. That's what I would expect. Let me see if the weekly is doing anything relevant. No. So here, right here, keep in mind that Monday and Tuesday can come higher into that for value gap as well. I would expect lower price off of that. Yeah, that's what I would expect. What time is it? How long have we been live? All right. Perfect. How much time did you end up studying ICT? Oof. How much you end study ICT? What is it? I don't know. What is the core content? The core content in itself is already I calculated it once and it was like 60 hours. 60, 50 hours, somewhere around there is core content. And mentorship 2022 was I also calculated that it was shorter than the core content. It was around 30 hours, I believe, if I'm not mistaken. And then also the market maker primer, like what, and then also your own studies. If you count them, your own studies, then yeah, if I count my own studies, it's above 1,000 hours. But what is it, like only ICT videos and studies after his videos? I would say around what is it, 200 hours, 300 hours, somewhere around there. So yeah, can you check High One Electric? That is interesting. Let me go over that. High One Electric, this one. Yes. What is happening? Did they go bankrupt? Earnings, not very good earnings, I see. All right. But yeah, earnings don't tell the full story. I always feel like with stocks, like, geez, what what is happening? Like, yeah, I can't even do a proper analysis of this. The only thing I can look at is like I'm seeing all this liquidity getting swept. So the thing I would look at is a rebalance, or at least a rebalance into the range again. Something along the lines of that. And then potentially even just a consolidation right there. And it will consolidate for a while and then it forms structure again. But yeah, damn. This is crazy. But again, not trying to call a bottom. So please, not financial advice or anything. But this is a huge gap that it can and will likely retrace back into. Right there. And then on the 4 hour, do we have something to work with? Not just yet. Not just yet. All right. What was the other one? The other one was, let me see. WeWork. That's WeWork is what is it? is the places where you can work, right, remotely, just in a city, etc. It's pretty fun, actually. It's a great concept. I wish they had it in the Netherlands as well. But by the look of their stock, they're not doing that great. But all right, what happened? This is usually a thing, right, where they launch, and what's it called again? The IPO, I believe. IPO happens, and then afterwards it just plummets. Just plummets. Like here, there's nothing really to work with, I would argue. The only thing I'm seeing is just lower prices. Like, I'm not sure how low it can go, but yeah, just lower prices off of this fair value gap as well. Right there. Respecting that, it's continuing lower. Monthly fair value gap as well. Then right there. If we can get some retracement into that fair value gap as well, then we can continue lower off of that right there. Just lower prices. Lower, lower, lower. Damn. It's crazy. Is WeWork actually doing that bad? I didn't know that. I thought it was doing pretty well. Hey, Ario, sir. Myself, Samyak Hiwale. Sorry if I mispronounced that. Beautiful name, by the way. I'm currently studying in 11th grade. I can't afford your mentorship because my parents does not support me and they will not give money. So what should I do? It's a great question. And the first thing I would do is, you're only in 11th grade. So I'm not sure how old that is or how old you are, because we don't work with those kind of grades, but I'm assuming you're pretty young, right? It's already a huge step that you even found about trading. And then the next step is already huge, that you found the right community in trading. And that is ICT in itself. But then in ICT itself, there are mentors that are not really fair to you, etc. So that is already an insane step that you are taking right there. So for that age, you are way ahead of your time. The thing you can do, and the thing I would advise to do, is potentially, I'm not sure what the currency is doing where you live, but what I would do and what I would advise is just get a job, see what it's like to work, like just get a job, whatever you can earn money from, and then that money or that job can support you trading in the long term, because you don't have to worry about a lot of things. You're living at home, I assume. So first, just get a normal job, I would advise. So yeah. That's insane though, that you already are so far, my friend. That's insane. Love that. It was very impressive. Thank you very much. Thank you. Appreciate that. Thank you. Where was I? Let me see. Where was I? I have a question. If on weekly we are targeting a fair value gap, but on the daily the price will never go for it, is there a way to know in the middle of the week that our bias is wrong? I have a question. If on the weekly we are targeting a fair value gap, but on the daily the price never go for it, what do you mean by that, essentially? So if we are having a weekly fair value gap, but price is just not reaching into it, is what you mean? Is there a way we can know that our bias is wrong throughout the week? Yes, there is a way to know our bias is wrong. That's likely it's trial and error, right? So in that case, it does the opposite of what you expected. Usually the way a weekly bias gets formed is by PD raise. So for example, this weekly bias got formed by that PD ray right there with that target. So the weekly bias is coming into that and then continuing lower. If that doesn't happen and we don't go lower off of that weekly fair value gap, then our bias is wrong. If our bias is wrong and we set something out ahead of time, then what I would do is step back and just don't try to make up my mistake, essentially. So just don't get involved and look at another pair that I can trade, but don't try to make up your mistake. The mistake happened. Perfect. Let it be, right? Let it be. Where was I? In an IT range, intermediate term range, if price doesn't take intermediate term high / intermediate term low for a while, when do we have to consider the following IT range, new IT high? Yeah, just new intermediate term high and intermediate term low. If it doesn't take intermediate term high for a while, when do we have to consider following intermediate term range? Yeah, you just keep on following it. You keep on following it. Like if the high gets broken though of that intermediate term range, so the high gets broken, then obviously the bias is flawed, and you would look at the opposite. You would look at higher prices, essentially, right? Follow. Yes, you're following into some range would be the STR to the initial STR. And so, yeah, exactly. How do you select which currency or which indices to trade for the day? So what I do ahead of the week, and this is what I do in the mentorship as well. I go over the pairs that I'm interested in ahead of the week. Then that is usually a very long list. And then throughout the week, it will narrow down, and it will, even after Monday, it will be very clearly to me that only 50% survives that list, for example. And then slowly you start to filter it down, which is the filtering process. And then eventually you get to a pair that you want to trade. And the pair I do want to trade for that day is the pair that is the highest probability. So I go over certain pairs. For example, DAX and USDJPY, they had a lot of certain arguments. USDJPY, there were only bullish arguments right there. That is exactly what I want to see if I want to trade that currency for that particular day. Then I combine it with the news. All right, is there USD news on that particular day? Yes, I want to trade it. So that is how I get to it, essentially. Would it make sense? If I want to concentrate on silver bullet strategy, what are the essentials I should master? Thank you in advance. No worries. It's patience. It's patience. Like the silver bullet strategy, it's patience. It's waiting. It's waiting a lot of times. For example, if we have this drawn liquidity, then you wouldn't get involved here, but you would wait. You would just wait, and then right here, this is something you can get involved. And swing rates as well, using the swing rates to your advantage. At the 0.75, that is usually where silver bullets do happen. What about if I only study the 8Z guide and apply it properly? Do you think I could still get the same returns I plan on making profits with? For sure, my friend. For sure. Like, the reason I say the 8Z guide is all you need, and I'm not lying about that. Like, don't get me wrong. The A to Z guide is all you need. But the thing is, the essentials is, and the masterclass itself is just me sort of like really holding your hand. Like the A to Z guide, you still need to do some things on your own, but the essentials and the masterclass is like, I'm like feeding you it. And that's also the A to Z guide, but the A to Z guide still requires some work on your own. That essentials masterclass, like that's completely removed. So yeah, for sure. It's 100% possible, for sure. Let me see, where was I? Oh. How do you effectively get involved with a higher time frame bias? That's a great question. That's PD race. PD race do the work for you right there. It's all in the PD race. Yeah. Like, how do I get involved in this high time frame bias? I'm expecting it to continue higher off of that. So how do I get involved in that? I'm waiting for it to first come into that discount rate. Then I want to go into the lower time frame and look for an entry pattern. And essentially what I'm doing on the lower time frame is the exact same thing as what I'm doing on the higher time frame. If that makes sense. Eliminated their dividend movements. Interesting. All right. How do you deal with losing streak? Great question. Like, the thing people need to understand, and a lot of people already understand, but it's crucial that making profits in trading is not the difficult part. It really isn't. It's not that difficult. The difficult part is when you do start losing, that you don't lose your sanity and that you go all in and you up your risk. Losing streak. Keep doing what you're doing trading plan wise. Keep doing what you're doing. The only thing you want to pay attention to is the risk management. How much are you risking? You want to decrease your risk. Take back risk. So decrease the risk and slowly start building again. It's very boring. It is. I know it is. It's the most boring part about trading, but it's also what trading is. Trading is not that exciting, believe me. But yeah, that's what you do. You decrease risk, you slowly start building again, and then you slowly up the risk again. But that risk management, that is what keeps you in the game. That is it. Like, it's all about risk management. Fire on Hawaii. Yeah. Yeah, that makes sense. Oh, that's a shitty situation. Okay. All right. And how do you, like, yeah, trading in zone? It's also very helpful. Like if you mean psychology side, like it's just also experiencing it for sure. Just experience it. Feel the pain. The pain is what makes us. It's a sign you're alive, right? So I don't know. Kind of fun as well. It's a challenge. You can see it as a challenge. When it's a challenge, it's kind of fun, right? You want to beat the challenge. It makes it fun. But yeah, it's focusing on risk management. If you can do that, if you can successfully do that, then you will always get out of drawdown. No worries. Or you doesn't need to be drawdown, but you will always get over the losing streak. Don't worry. Don't worry at all. I keep on getting smacked back to the beginning. Let me see. Where was I? Zimbabwe. Beautiful, my friend. Beautiful. Love to see it. Love to see it. Hey, why price have hard times moving from internals to externals? It's usually when seek and destroy conditions are happening, so it's not following through. It's essentially what you're saying, right? That's you. Yeah. That's could be seasonality. There could be lack of news as well, or it could be too much news in a sense. It's a lot of reasons that go into it. We can't know the full reason behind it. What we can do is we can avoid those prices. A half-time job at the end of the day is perfect to build for sure. Like, don't dive into it fully. Like, just take it easy. Small steps. From Bangladesh, love to see it, my friend. Love to see it. GBP JPY, please. Yes, sir. Let's do it. GBP JPY. GBP Gap USD. GBP USD. Yeah, I went over it at the beginning. It's funny how the longer these live streams are, I always at the end of them you can notice. At least I can notice for sure. Like my talking gets worse. Not really worse, but I just stutter more. For example, that. Like it's funny how that works. Funny. I need to work on that. GBP JPY here. What I'm seeing is we are not respecting that first fair value gap. So the first thing that comes to my mind is that we are likely reaching for something overlapping. First overlapping thing is that high right there, which with that fair value gap as well. So I do think we are sort of trading back into this big range. When we are trading back into that range, from there we can continue higher. Then that already leads us to the drawn liquidity, which is that overlapping part, right? So on the 4 hour, we can see, all right, we only have an ST to work with. If we have a new bearish fair value gap, that kind of confirms it. And then we can trade from that. So that could be very nice. So this would be my drawn liquidity right there. That high. Let me see. Where was I? Great recommendation, Nabil. Great one. Is it okay to join mentorship with A to Z knowledge? For sure, my friend. That's exactly that's perfect, because then the transition will be very easy. Yeah, for sure. Alright, thank you for your content. Some of us are third world African countries trying to change our financial destiny. We can't afford to pay for it. Thanks for the free stuff. No worries at all. And that's exactly why I also think like giving stuff for free is very important, and I love to do it. Like I absolutely love to do it, 100%. I don't understand the difference between essentials and masterclass. So essentials essentially, well, it's funny, no pun intended. Essentials is you are getting the course content, you are getting all that you need essentially, and then the masterclass is where you also get support and you get some extra videos. But the essentials, really, trust me, essentials, the same with the A to Z guide, it's sort of the higher you go. So A to Z guide could be all you need. Essentials could be all you need. Masterclass is all you need. But the higher you go is the more, or the easier it gets somehow. The less work from you is needed. Like still, masterclass, a lot of work from your side is needed, but it makes it easier for you. If that makes sense. So essentials, again, I always advise people first go to the essentials. If you like it, then you can go to the masterclass. Like you don't need the masterclass. The essentials is the full course content. But the masterclass is where you have the community and where you are surrounded by like-minded people. That's also could also be, it's just whatever you prefer, because I know some people that like to be on their own and study on their own, so they prefer the essentials. Hey, I was here on last week's weekly forecast. Remember, your USD target was reached. However, we didn't sting into the daily Vervaga first. So, did you still engage in a trade, even if it didn't do so? So, I didn't engage in any trades, but I wasn't trading that week. But what I would do if that doesn't happen, I go onto the 4 hour and see on the 4 hour, do we have new Vervaga gaps lower to work with? So, right there and right there. That is what I would look at. That order block as well, right? And then continue lower off of that. That's what I would do. So then I go down time frames on the 4 hour, not the 1 hour, 4 hour right there to see, all right, what are we doing? It's okay. Yeah, with essentials, you can contact me, but the reply time is just less. And usually, well, how do I say this? Like, there's not an easy way to reach out to me with the essentials. Like, masterclass, you get Discord access and you can ask me anything private, etc. But if you want more, I'll fully explain it as well on my email, for sure. Where was I? Let me see. Notice the time flip in your toolbar. Do you use it to mark out 90-minute cycles? I personally don't. I did do that actually. I've studied it. I believe I have some things here. Yeah, I've studied some things, but this is like a very long time ago. Like I would say almost a year and a half ago, and I haven't used it in a long time, and I didn't find it very useful. 90-minute cycles, not at all, to be honest with you. So no, I don't use it. Do we have to use 4 hour or can we go straight to 1 hour? Depends on what you're trying to do. It's if the 4 hour you depends, like you have 2 trading plans, and I see you're in the essentials and you learned so much and it's actually worth it. Love to hear that. So you have the flow trading plan, right? That's when you would go straight into the 1 hour. If you're using the filtering process, I would advise 4 hour, and you will understand what I mean because you're in essentials. Hopefully, like you will understand. That makes sense. AJ as well. Yeah, for sure, my friend. For sure. $30 JPY. Let me see. What are we doing? All right. We have that swing low right there. On the daily time frame, we have new fair value gaps lower, which I like. Off of that fair value gap as well. Nice. I like that. So this is already some kind of resistance right there. Then either into that fair value gap or we create a new fair value gap, and I would use that fair value gap to continue lower with that as target right there. Looks pretty nice, actually. Looks pretty nice. You're the best mentor I've ever seen in YouTube, so please continue to share secrets. No worries, my friend. I will never stop sharing stuff. Believe me. I will never stop sharing stuff. Appreciate that a lot, man. Appreciate that a lot. It means a lot to me. Thank you for that. Thank you. Where was I? In GBP JPY. Let me see, my friend. GBP JPY. GBP JPY. It was off of that daily fair value gap, I imagine. Or 1 hour ST. Where did you take a 1 hour ST? Am I reading it right? On Monday, I have seen 1 hour ST. On Monday, I've seen 1 hour ST. I'm all the way. This is Monday. My bad. Monday, 1 hour ST. This one? Did you lose this one right there? How come? Or were you trying to short on last Monday? Yeah, this Monday, right? Was you trying to short? The short, if I like the long is that's a nice ST long. Only thing is it didn't come off of a discount rate. But the short, yeah, the short. All right, the short is I wouldn't personally short that. And the reason, let me tell you why, is because right there, just based on a daily, just based on a weekly, we've been going higher right there. So there's no reason for price to sweep that high and then continue lower. Like that's not very logical, if that makes sense. So right there, it feels like it's more so trying to call a top in a sense, instead of trying to focus on riding the new expansion higher. So that is how I would view it. Like the ST itself, yeah, it's perfect. It's a perfect ST. Like, don't get me wrong, yeah, it's perfect. The only thing is the high time frame bias, it's like trying to call a top right there. It doesn't really make sense to enter off of that premium array. It feels very random in a sense. Hope that makes sense, by the way. Let me see. If I'm telling you the HC guide is really perfect, if you don't understand something, it will explain itself in course, the videos, or after watching. Perfect, Eric. Love to hear that. That's very true. Like everything is explained in all the videos, if that makes sense. Like it's just, if you watch everything, don't worry, you will understand it. Are you the ICT student, which Mike refers to be the genius student of his? I believe so. That's me. No, that's the what was it? Was the joke thing? The joke video. It was funny though. Best thing you can do, remove Monday for trading majority of the time. There's no hyping. News at low probability. Exactly. Yeah. Like yeah, just for if you're starting out, like I would say also like just remove the Monday. It's not worth it. Thanks for everything, but I've been struggling with supply and love to hear it, my friend. Don't love to hear that you're struggling, of course, but love to hear that you're finally finding the right path. That is very important. Aria's kindness and generosity is unmatched. No. Don't praise me. Don't praise me that much. Keep me humble, please. Yeah, I got funded first month in Essentials. I sent you an email. I'm waiting for a response. When did you send me an email? I think did you just send me an email? Like I think Friday is the last time I went over my emails. That's crazy though. That's crazy though. How much did you get funded, my friend? Tell me. That's insane. That's all your hard work, my friend. That's all your hard work. Love to hear that. Such an amazing class I'm having here. Thanks, boss, for your time. Hail from Nigeria, River State, precisely. Love to hear that, my friends. Love to hear a lot of community members here are from Nigeria, I believe, and India as well. A huge community. Love to hear that. Absolutely love to hear that. Let me see. What a dream yesterday, but today there's lots of new lessons and knowledge. I had some crazy dreams this night. Like crazy dreams. Dreams are so weird, man. So weird. 50k tops is actually the certificate going for 150k next. Let's go. Love to see it. I'll check out the email probably either later today or tomorrow. And that's insane, man. That's insane. That's all your hard work, my friend. Best trading YouTuber. I saw so many YouTubers. No one is like, I love to hear it. Now I need to go and I need to humble myself. No, thank you. Appreciate it a lot. And that's insane, Jana. That's absolutely insane. Let me go over this last question by Yura, and then afterwards we'll wrap it up. Let me drop my email as well for if there's anything. I probably will go over my email again tomorrow or later today, but I do have to do some other stuff. So yeah. Can you explain why most of ICT users love New York in the EU GU? Because most of New York session is continuation of the London session, but when I try New York scalping, there's a low RR. What's the best strat in New York? OTE plus PDA. Yeah, I would also say OTE plus PDA. Exactly what ICT initially also taught. It's just a continuation of whatever London is doing. So yeah, it's just a continuation. Yeah. Yeah. All right. Perfect. Thank you, everyone. For being here. Again, thank you for the super chats. Absolutely insane. It's not needed at all. But thank you. Appreciate it a lot. You are all the best, amazing human beings that we have here. Like this community is so insane. Like we have no beef with each other or anything. It's a community full of amazing human beings. It's absolutely insane. So love you all. Thank you for this. Thank you. I'm completely my energy is gone. And love y'all. I'll go over Instagram questions as well after this live stream, which I had yesterday on my story. So yeah. How are you regarding getting tongue tied? Sprinkling a little sea salt can clear that up. Thank you for that. That is a great tip. Thank you for that. I'll remember it. Thank you. All right. Thank you, everyone. I'll check you at the next one. Stay safe this week. Remember what we talked about. All right. Thank you. Love y'all.